And hey, good morning, everybody. What's going on? Happy Friday. Whoo! That's some big moves in the futures. Down. Anyway, let's jump into it, shall we? Morning Monster got a new flavor here. It's Strawberry Dreams. It's a little can. Pretty tasty. It's kind of like a strawberry pina colada, I guess you might say. Wake up in the morning. Yeah. Anyway, we had some data hitting this morning. Roll down here, core PCE, and I need to refresh this. We can see right here, coming in hot. That's that's 50% more, and kind of maxing out what we saw most of last year. That's I don't know. Let's talk about that in a minute. So let's pull this over. The Fed's favorite inflation signal prints a hot as American spend surge in January. I use Zero Hedge as a news aggregator. They pull up all sorts of charts and stuff. They've got some interesting data in here, but you know what? In another article, check this out. The Fed has adjusted, or whoever does the retail sales, the seasonally adjusted retail sales all the way up here versus the unadjusted number down here. I mean, that is a huge difference right there. A 10% revision higher. Yeah, this was the retail sales unadjusted, the way it was coming in. They decided to adjust it up, peaking up here. You see, they adjusted December down, and then now we're adjusting January up. I mean, is this even making sense? So, I don't know. This is consumer spending, kind of, as we read it, 2 months in a row, month-over-month declines in spending. Consensus for forecast for both spending and incomes grew month-over-month in January. Yeah, sorry about that. Here's the retail sales right here, adjusted, and Fed's favorite inflation signal prints hot. That's what I was kind of telling you. So this is an article right here off the news aggregator. They kind of go through some of the different information, and then retail sales. There's the adjusted. So we have the adjusted number in green up here. The actual read in red. Seems like a large discrepancy to me. I mean, in the past, we get these dips and they adjust it up, and it turns out to be kind of okay. But I'm not so sure that everything's okay right now. Are we still reading hot? I don't know. So, kind of feel like, whew, that escalated quickly on the futures dropping. So there's the PCE read, about 50% higher on core PCE, coming at 0.6% instead of the estimated 0.4. And we were 0.3 on the last read, estimating 0.4, and we got a 0.6. That's a little crazy if you ask me. If you wanted to go see the report, let's see. Right there, you can jump to it. Personal income outlays and Bureau of Economic Analysis. You can see their current release here. If you are into digging into the numbers. There's their 0.6 right there. 0.3 in December, 0.4 in November, 0.9 in October. I don't know. I kind of feeling like they're cooking the books a little bit right now. Trying to make everything look great, even though I'm not feeling it great. Are you feeling it great? I don't know. It's kind of like they're trying to spit polish a turd ball. Anyway, that's certainly, I mean, they can say the economy's great all they want and encourage spending, but the truth is we're borrowing more money. I mean, every time they print the new, credit card borrow chart, I don't have it up right now, it hits a new all-time high. We're running on fumes here. At some point, this whole thing's going to crack, start coming apart at the seams. The Inflation Reduction Act, just encourages more inflation when the government spends more money. I don't know what they don't understand about that. You can't spend your way out of inflation. It's just not the way it works. So, anyway, a few things moving. Let's pop over S&P 500. Made a beautiful bounce yesterday, but I'm not so sure that that's going to be the bottom. It could have been. Nice big spike down and closed up here, but with the numbers today, that's looking like we're going lower low. And you know what? It's Friday. I have to warn you, 90% of the time we do not make the lowest low on a Friday. It usually, like back here, it didn't happen on Monday or Tuesday, but it happened the next week. And today, this low on Friday does not give me confidence that we're going to find the lowest low today. It may continue into next week. It just happens like 95% of the time. That's just the way it works for the market. So, just wanted to get that warning out there. It's one of those things. Just a quirk of the market. Like most of the time, we don't find the bottom on Fridays. Back over here, we do have room down to that 39.24 area on my other chart where we would hit the, let me see, pull it up really quickly if I can find it. I had it on there it is. This one right here. Mouse stopped. Zoom that up really quickly. See this 39.24 right here. 39.24 is right in that zone. We could push right down in there. If we rejected that line, that would be great. If we get below that purple line, which is the majority of the highs for 2022, I am afraid that we are going to see a lower low in the market. Be cautious of that. I would put a bunch of alerts like right around that 3,900 area. If we start closing, getting more than 1 day close down there, that's looking like we're going to go lower low, unfortunately. So it's like a big red cautionary flag. Got to be prepared for what may turn out to be bad, and that's it right now. So that's what I got. All right. I would be remiss if I didn't warn you that this thing could go bad. Now this range right here where we held the low, that may hold again. That's right around 39.13. So in the same vicinity at 39.24 on the other chart, we may do another little poke right there. And we have broken that. We had that uptrend of lows, and we've definitely broken that. So there's a few things working against us here today, and we're coming into a 618 retrace of this whole move up off of that low from December. That's all kind of works together there, what we're looking for. All right. NASDAQ also poking down into the bottom of the roadmap line, and it may come back on down. It could accelerate a little more. It's lagging behind the S&P right now. You can see S&P is pushed a little lower than the roadmap line. NASDAQ hanging up here. And Russell, as I said yesterday, may need a little more to get to that roadmap line. So one thing we do see, the dollar testing the roadmap line. Now, can it break out, or is it going to come up here, spike, and get slammed back down? I'm kind of thinking we go for a slam, but it may not. The high right here may be the point which we test. You can see when we tried that last time there, it got slammed big time, and it can do that again today. Nice big move up. Tried to poke higher and slammed. So I'd watch for that right there. And then the other one I really like to look at. Let's see if a keyboard will work here. No, Yes, maybe. There we go. Nope. Didn't like that. No. There we go. This one right here, turn it out of log. We're hanging out in those 40s. Now, we could drop on down to the lower end of the range, but I would kind of like to see these lows hold in here for continued rally higher. This is just stocks on the S&P 500 above their 50-day moving average. I'd like to see that kind of hold in here. Now, everything's gotten pretty sour. Everybody's kind of expecting this big down. Let's talk about the market psychology for just a second. When all the players are expecting a move down, the market doesn't tend to do that. All right, lots of funds, lots of big players, lots of banks have avoided going long so far, and they really need it to go lower, and they kind of push this narrative that we're getting a big correction, we're getting a big, this recession is going to happen, we're going to push it down, we're going to go to lows, it's going to be horrible, blah, blah, blah. Everybody's kind of waiting on it, and it may never happen because of that. And all these banks may be forced to chase it. And that's kind of what I think we're happening right now, is getting into this negative thing where we may liquidate a few of the retail traders that got super bullish into this beginning of the year rally kind of thing. And we may chop them out just a little bit. But retesting this purple trend line can get that bearishness going in the retail traders. Maybe give the banks and the bigger players a chance to get in. And if they don't get in, well, they're going to be chasing it if we bounce right here. So that's something to watch right there. This purple trend line, the simple chart just based on closes, does go just a little lower down here to 312 or so. So we could see, just depending on how you chart it, we could see a little push a little further lower and bounce. But right now, bouncing is my expectation. This is a very classic pattern where you break out, you come back, you retest it, and then you go. Very classic. All right. Actually, looking at some stuff that's moving and up today. Well, let's pop back over to the other chart. So we have Square. Look at that. Even though market's big red down, Square finding a little support at the roadmap line and bouncing on earnings. They missed on the top, beat on the bottom, had good outlook, and getting rewarded for it. So up about $3-ish. I think if we look down, it was probably up a little more. Yeah, was a little up a little more last night, and then drifting back off, probably bounce off that 15-minute roadmap line at least. If not, go retest the close for yesterday based on the sour mood of the market. Carvana it popped and dropped, or dropped and popped, and I mean it was all over the place last night and getting drop off today. Lost incredible amounts of money on the top and the bottom. I mean, big revenue numbers, but what you make up for in volume, you can't be like, oh, I lost $1, so I'm just gonna make up for that and do a whole bunch more volume. That's a bad plan. So that seems to be what they're trying to do, is make up in volume, move more money. But the more money you move, if you're losing dollars every time you move the money, that's a sign for going out of business. So I would watch out on Carvana. That one can go in the toilet quickly. I mean, it's down, 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 baby. It had a nice little pop back here, but how long can you run losing tons of money before you go bankrupt? Beyond Meat getting a nice pop right up to the roadmap line. Again, it's got to break above those highs right there to get some continuation higher. Otherwise, it can bounce down one more time. Actually, losing money, but surprisingly not losing as much as the market thought it would, or the analysts. And beating on revenue. That's not moving huge amounts of money, obviously. But I don't know. They're saying that Americans lost their appetite for these alternate meats a little bit as the inflation raged. Can we make a bottom and reverse? I don't know. Yeah, yeah, that is true, Goose. The hardest part is you got to be into this to win it if this comes off the lows. This one, good grief. I was looking at stock quits. You got Bear. This one came off of here. Altics. Square getting talked about beyond. NUWE, Spy, Ocean Biome, whatever. Mankind, Lunar. So I picked up a few of these off of there and a few of them off of the Market Chameleon movers. So this one just looks like a choppy mess below $1, penny stock. Bear, Bridger, whatever, Briger, however crap you say that, aerospace. Nice pop on that one. Looks like the market's open. Just got an alert on GNW on my watch. See, Lunar, LUNR. That looks like a crazy move. I don't remember what I drew up there, but oh, that was probably pre-market stuff. Yeah. Went on down. That one looks dangerous. Melly. Whoa. Where'd they go from? 1137 peaked at 1207. Wow. That was a big move. This one can blast off right there. If you got that kind of money, that one looks ripe to take off in the face of this market that's being stupid. I mean, look at that right there. Bullish breakout above that kind of level right there. Oh, that looks, yeah. Looks like it's going to come on up here, retrace, and go even higher. Next one, FND. Zoom it up. Looks like it had a pop, but getting a drop. It's going to come right back down, fill that gap, and maybe retest the roadmap line. That would be my expectation. It's right back on down there. All right, market's open. Let's see what we get today. Can we get a bounce, or are we going to keep pushing lower? Right now, looks like we're going to keep pushing lower. Not quite there on the S&P's got another 40-ish points to go to fully test that zone down there. This purple line's not as accurate as the one on the other chart. Let's see if we can get back to the... Come on, keyboard. Oh, that's cool. There we are. Got a little ways to go. So, all right. Be safe out there. I've got more live streams going all day. I'll be on Ask the Pros at noon. If you're unfamiliar with Ask the Pros, let me grab the link really quickly out of Discord, and I will throw it up there for you. Here is the link in the chat for Ask the Pros. I'll be on at noon and talking for about an hour with a round table of people. So, all right. Remember, like, subscribe, click the little bell thing. I will go live again on Monday morning at 9:15 with the movers of the day. Digest the moves of the market over the weekend. You know, the futures do open at 6 p.m. on Sunday. And crypto is going to keep moving. So come back, check me out. And Tuesdays, we have the 30 Minutes of Awesome where I take your requests. So have a great day, everybody. Be safe out there. Watch out for the move down. And hopefully we can find support at this trend line.